Hi, welcome back to the Drummond channel. I ran across something today that I thought was pretty interesting, so I want to incorporate that into a look again at the Nasdaq and see if this starts to paint a different picture for where we're at in terms of how overbought this market might be. So what you're looking at now is a yearly and a quarterly chart, and some key areas I've drawn on there with the yearly 5-1 down that was a little bit below where we're at right now. And then there's a quarterly envelope top and a quarterly 5-2 down that we've already tagged that area and we backed off a little bit from it. And then I want to look at a monthly, a weekly, and a daily. And then this last chart I want to show you and see if that helps put this all into perspective. So with this monthly chart, you know, the monthly PL dots are still sloped up pretty strongly. And also you can see that on the weekly. And you can make the case that, you know, we've gapped down so far on Sunday night. This is July 13th, and market has moved inside the envelope. That's the quarterly up there on the yellow line. It's inside the weekly envelope. And then the daily does look like it's putting in some congestion. So near term looks like it's slowing down and is doing it in an area of higher time period resistance. So it's something to pay attention to. For Holy Grail users, you can see the oncomings are starting to tell us that the daily has slowed down and is starting to perhaps push down into a weekly PL dot refresh or a little bit lower. You know, taking this day by day. On the weekly chart, though, we still see these oncomings pointing towards over 23,000. And of course, this monthly for next month, this target is way up here, and there's quite a bit of month left, so we'll see where that ends up. The point I'm making, though, is we've crossed into yearly resistance, strong resistance. We've crossed into quarterly resistance, and the daily and the weekly are showing a little bit of weakness. So let's take a look at this next chart and see if this puts it into perspective. And I ran across this on LinkedIn. There's a guy I follow on there that posts some really good stuff. And, you know, the red lines, the red areas are where people have borrowed money to buy stocks. And if the bubble in 2000 was an indication that things were overextended, well, we didn't even know what overextended is until you look at where we're at right now. And this in comparison to this. And he's calling it an AI bubble. You can call it what you want. You know, when the dot-com bubble burst, the internet didn't go away. When the AI bubble bursts, if it bursts, you know, AI is not going away. It's just the valuations are going to start to return to normal. So we're at yearly, quarterly resistance, and at this point, more money's been borrowed to buy stocks than ever in recorded history. That's kind of is that a bubble? I don't know. You know, we'll see what happens. Something else just to pay attention to, I thought it was pretty interesting, and I just want to integrate that into the Drummond geometry and what we're looking at, because this might be different this time, or we might be running out of buying power because who's left to borrow money to buy stocks? I hope that helps. If you have any questions, please, I'd love to see them in the comment section. And you know, have a great week. Good trading, everyone.